Welcome back. Markets erasing gains as we head towards the close. Jared Blikre is here with a look at the action and what is driving them down. Hey, man.
That's right. I was looking at the timestamps. We had a big sell-off, and I'm going to get to that in a second, but I want to show you the British pound because the timestamps match up perfectly here. Now, this is inverted. Usually we see this the other way around, but this means a strengthening dollar. This is intraday, and right before the bond market closes, our UTC times, by the way, we had Andrew Bailey. He is the Bank of England governor. He was speaking in Washington, and he was basically talking his line about how they're doubling down on this bond buying program into Friday, but he warned because they are trying to stabilize market prices in British gilts for their pension funds. You need to get these transactions done by Friday. That is a message. Pension funds, we saw the U.S. dollar appreciate on this, and I'll show you what happened in the market. It was a very steep sell-off. Now, percentage-wise, it wasn't the biggest. You can see in the S&P 500, we're not even down 1%, but I measure something called the New York Stock Exchange advancing issues minus the declining issues. In other words, nice Z-tick. And that was registering minus 1,500 readings, something I haven't seen in weeks. This is a very illiquid market. Could have something to do also. These headlines appeared right before the bond market closed at 3 p.m. That could be a factor because yesterday was closed for the bond market. Adding it all up, I would say the markets are still structurally weak. You take a look at the year-to-date in the S&P 500. We are knocking on the lows of the year right here, so we'll have to see what happens in the final 40 minutes, minus a couple here in trading.